Hey guys, what's up? Alec back with the daily stock market, and we have a whirlwind going in the stock market today. So we're going to go over 5 different stocks that have been affected and made some pretty big moves. We're also going to go over those 5 same stocks are good ones to buy right now. And I'm going to go over these 5 different stocks in detail. So make sure you stay throughout the whole video if you want to add 5 new stocks to your watch list, because I think some of these stocks are great for long term. So I'm going to go over my candid thoughts on what I think about it. We're going to even go over price points where I want to get in, how long I plan on holding, and much more. So make sure you subscribe, and thank you for all the comments that you left on my last video. Let's keep it going. We're going to do another 5. This time we're actually going to do 5 winners on the comments, $5 to each winner. All right, so make sure your comment, all you have to do is leave a comment and you're automatically entered into the giveaway. Instead of doing $15 to one person, I actually gave away a lot more money than $15 yesterday. I chose like 3 or 4 different winners from yesterday. So there's a good chance you could win today. But with that being said, let's get right into the video. Okay, so the first one we're talking about today is going to be Fisker, because I know everyone's going to be asking me about it. So let's just make a video about it and let's talk about it so you can hear all my thoughts. Now, as you can see, if you go to the past week, they're down only 2.8% because on August 9th and August 10th, remember, they skyrocketed and spiked, and a lot of people were selling their positions at that point. So they're not even at a 3-month support, let alone a yearly support. You can see they established a pretty hard support here right at $15 to $14. Again, here at $15 to $14. So I think under $15 is a great place to buy Fisker if you're a swing trader or if you're a long-term trader. All right, I only have 9 shares, looking to add a little bit more to my position, but my average cost is 14.4, so I really want to get that a little bit lower. Now, as you can see, they just reported earnings, and they did beat on earnings, yet the stock is obviously down. Here you'll actually see Fisker's management remained tight-lipped on specifications of its flagship Ocean SUV at the second earning call on Thursday, which was last week, leaving investors and potential customers empty-handed once again. But one thing that remains clear is the company's 5-year plan to become the world's most sustainable car maker, which involves 4 EVs, electric vehicles, strategic partnerships, and becoming carbon neutral without offsets. Its asset-light business model enables cost savings that are passed on to customers in the form of highly competitive pricing, which is good because they plan on being the world's most sustainable car maker in 5 years. So if you're getting in at $15 or under for long term, that can be very beneficial, which helps make secure, robust cells, and global EV adoption continues to accelerate. All right, so as EV gets bigger and bigger, they're going to remain competitive with their pricing, which is going to give them a huge leg up. With the Ocean SUV commencing production in November, which is only a few months away, and 3 more models to come before 2025, there's a lot of bullish reasons to be bullish on Fisker over the next 3 to 5 years. Fisker's proprietary business model is expected to pay large dividends in long run when considering a relatively flat share price in recent weeks at the $14 to $15 range as investors mull on upcoming November launch of the Fisker Ocean, the new SUV. The current price levels make a reasonable buy opportunity for upside of more than 40% just in the near term. So, they can easily be a $20, $25 stock again in the short term, and there's much more potential for Fisker in the long term, which is why they made this video. Okay, the next one that we have to talk about on the day is going to be Wish, down around 25% on the day, down to $7.50, one of their lowest they've ever been. They have a support right around $7.75, so they did go lower than that. So it'll be interesting to see how much lower they can possibly go. I think that this is a great place to be buying into Wish for a long term. They also have short-term potential because they are a meme stock, keep in mind. So the next thing you know, they can fly up 20% on the day. They're definitely that kind of stock. But the good thing is if it doesn't happen and they don't fly up huge on the day, they're still a great stock to hold for the long term. I think there's definitely money to be made over the long term. So I'm going to be buying around probably, let's say, $200 tomorrow morning as soon as the market opens. And if it goes lower to $6, $5 per share, I'll keep buying Wish because I definitely believe in their business model over the long term. Okay, so here we'll see Wish stock price has been significantly declining since June, with the market overreacting to the CFO resignation and everyone's disregarding several bullish events that have occurred. Wish is unveiling new management appointments in Jack Reese's organizational growth oversight, with more to come. Wish's entry to merchant payments will have its major investors playing a behind-the-scenes role to support, and the new business value can grow rapidly to surpass Wish's current market cap. Wish also has its pick of partners in consumer fintech, especially amongst buy now, pay later companies keen to tap on Wish's unique offering. Wish short interest overflow is likely grossly underestimated and potentially more than 28% by my estimates. Shares have dropped almost 30% since June, if not even more. Wish is building logistics business, which is already driving the firm's revenue growth. Logistics revenue accounted for 32% of revenue in Q1 2021. I expect the logistics business to continue to be a key driver of growth for Wish going forward. Wish's sales growth has become even cheaper on the drop relative to other e-commerce rivals, which means that the lower it drops, the more of a good deal you're going to be getting for long term. Based off rival price for sales ratio, Context Logics, or Wish valuation could double, which is why I bought them once they dropped again. Okay, so the next one that we're going to be talking about today is Tattooed Chef reported earnings today, where they were in yesterday's video as well. Down 8% after hours, 2% on the day, over a 10% drop. Looks like they're already bouncing back a little bit. But as you can see, they have a support right around $19. They broke that support, and they're going lower to the $17 support, and their lowest support is right around $15 or $14 per share. All right, so I think anything under $20 per share is a great place for long term. This is a plant-based company, and plant-based food companies are expected to grow very heavily over the next 5 years. So currently I have 43 shares, looking to add more to my position, and we had over a 10% drop today. My average cost is 19.5, so if I can get lower than that, which I can right now, I'll be buying more shares. Okay, so here we'll see the company's revenue increased by 58% compared to Q1 2020 and exceeds analyst expectations by $6 million, which is huge. Shares have potential for further growth due to active expansions in the domestic market and the availability of production facilities for rapid entry into the European markets. There is room for further growth for the stock to be above the level of $25 or more. So keep that in mind. If you buy around $18 or $15 per share and you write it up to $20, $25 per share, that's a great swing trade. But most of the value with Tattooed Chef and other plant-based foods in general will come with long-term holds. Next up, we have another cheap stock that fell around 10% today. SOFI Technologies, they're a fintech company, and they're a great one to buy, in my opinion, for a long-term hold for under $15 per share, or right at $15 per share. You can see they have that support right around $15, $14 per share, and they've skyrocketed above $20 a couple times in the past. All right, we have 69 shares of SOFI, and we're looking to add more into the position for long-term holds. But if they go up to $25 in the short term, in the next 3 to 6 months, I'll probably be offloading some of my shares. Currently a $19 billion company, and they have a good amount of volume going through the stock too, with 33 million on the volume. SOFI is a personal finance platform with accelerating members and revenue growth. Strong growth in multiple product accounts improve customer monetization. SOFI could benefit from stronger than expected revenue growth as fintech adoption speeds up. SOFI revenue growth may be cheap if platform growth continues to accelerate. All right, so about $15 per share is a great place to buy in them because fintech is going to speed up, especially over the next 2 to 5 years. Probably I'll hold SOFI for over 12 months, but some of it I might offload, like I said, at 6 months, especially if we see it hit $25 a share quicker than expected. All right, so the next one on the list is Lemonade. Most of you guys know this one already, down 21% in the last month, although they're up to 26% in the last 3 months, and they peaked at about $110 per share back in June. And earlier in 2021, they were at $183 per share. So the question remains, should I buy them at the current levels they're at? Personally, I think anything under $75, even $80 per share is a great place to enter Lemonade for long term, but you have to understand that this one is a little bit more risky. Obviously, it can go as low as $50 per share again. That's not out of the question, or even $60, $65 per share. But there is some high upside for Lemonade. I think a possible swing trade to $100 per share is very likely. And I think for them to see new all-time highs or even go to $150 per share is definitely possible for Lemonade to do again. So here you'll see Lemonade has been showing a very strong fundamental growth while also showing an ability to diversify its business across numerous insurance products. Investors have been disappointed recently that there is no firm date for a debut of Lemonade car insurance. So car insurance is going to be huge. And once they announce car insurance and there's a firm date on that, we can see the stock actually spike like 10 or 20% on the day because that's huge. Lemonade, it's really good prices. So if they get into car insurance, I'm sure they'll offer some of the best prices. And a lot of millennials are going to want to use Lemonade. Lemonade is stepping down their reinsurance quota share from 75% to 70% as they also complete a favorable reinsurance renewal. The company is a buy at current prices for aggressive investors willing to speculate in a very high upside speculative stock. So that last bullet point was all you really need to know. The company is a buy at current prices for aggressive investors. So you have to be an aggressive investor willing to risk some, but it has a very high upside on Lemonade. So I hope you guys do enjoy these updates. I enjoy the comments you leave, and even if it's something very small, just comment on the video like, nice video, nice job, keep it up. It doesn't have to be the most thought out comments. It could even just be an emoji. These help me a lot. The comments go a lot further than you think as a creator, so thank you guys for helping me out reaching new audience. And if you want to join my waitlist, remember, I did start a waitlist. I cut off signups to my program. And if you need some help, if you want me to take you under your wing, I'll send you over an application so you can fill it out. And then after the application, you can check out my website and see if it's a good fit for you. All right, guys, so make sure you share this video with a friend. Also, smash the like button and make sure you're subscribed with the post notifications on. I'll see you in the next video. Remember, don't time the market, buy the market. Peace.